So let me walk you through a couple things that are worth starting right now, so you can be ready to buy in the next 2 to 6 months. Some of these suggestions and recommendations seem obvious and mundane, but it's often the small things that tend to trip people up when they want to buy a home. Okay, I'm going to use this as my timeline. Buying a home within the next 2 to 6 months. We are in February right now, so between April and July, I would suggest that you do this immediately. Well, right after you watch this video. Turn over your credit cards, call the number on the back of the card, and find out when the reporting date is. Do that for every single credit card that you have. Don't find out when the due date is. Find out when the reporting day is. The reporting day is the day that the credit card company reports to the credit bureau if the account is current and how much utilization is on the account. And then you want to schedule for an automatic payment and automatic withdrawal for the minimum amount due to come out 2 days before the reporting date. You want to do this for every single month, for every single card. An automatic payment 2 days before the reporting date. But the next thing you're going to do is go into your phone, and on the day that they said they report to the credit bureau, the day before, put a notification to call the credit card company to pay the remaining balance. Hold on, not the entire balance. You want to pay the balance to where it's anywhere between 2 to 6% utilization on the card. Yes, I know it may seem like a random number, but in order to boost your credit score the highest, you need to show that you are using the card and are using it wisely and are a good steward of those funds which they gave you. So you don't want to pay off your card every single month. You want to keep a small balance on it so you can show that you're utilizing the card but has a small utilization rate. Now, I know some of you heard that and think that that's a little bit of overkill, and you are 100% correct. It is a lot of overkill, but we aren't trying to be like everyone else. You're trying to buy a home here, and presently only 44% of African Americans own a home. And not just own a home, you want to own a home in the next 2 to 6 months. So yes, we are going to go through some extreme measures to make sure you're in the prime position to buy a home in the next 2 to 6 months. So let's do what others won't do so we can be in a position to have what others won't. Because those other people are going to be complaining either way. So we might as well put in the work, get the results while they continue to complain. So this first strategy accomplishes 2 things. First, it makes sure your payment is on auto pay, so you're never going to miss a payment. 2 days before the reporting cycle, you make a payment every single month for the minimum balance. Then next, the day before, remember you set your alarm on your phone, the day before the credit card company reports to the credit bureau, you're calling and making sure your balance is between 2 and 6%. And just that alone, making sure your balance is in that range, will dramatically increase your credit score in a very short period of time. For quick math, some of you may be wondering, what is 2 to 6%? If you have a credit card limit of, say, $1,000, you want to make sure that your utilization every single month is between $20 and $60. Yes, again, I know it seems random, but you have to use the card and keep a small balance on it to show that you're a good steward, to maximize the reward or points that you get in your credit score every single month. Real quick, before we move on, I want to introduce myself to those of you who are new to the channel. I'm Sir Ashley. I am a realtor and investor here in the Carolinas, and on this channel we talk about real estate and personal finance. For those of you who have been following and watching this channel, I appreciate you. Thank you for rocking with me. And to all of you, hit that like button and share this video because it greatly helps out the channel and I appreciate it. Now let's move on to strategy number 2. Now, you know if your credit is not great or if it's not even good, there's no need to fake it. A good credit score is between the ranges of 670 and 739. An excellent credit score is over 740. And if you're below 670, you need to work on your credit. And you probably heard of strategies such as debt negotiation or debt settlement or debt consolidation. And right now, if you're trying to buy a home in the next 2 to 6 months, do not do any of those. Don't do any of that because it's going to do more harm than good in the short term. So just because your credit score is below a 670 Do not go through the measures of debt negotiation, debt settlement, or debt consolidation. Stay far, far away from it. You know it's tax season, so you're going to see those signs on the side of the road at the intersections saying credit repair, $89 a month. Don't do it. Not right now. Not if you plan on buying in the next 2 to 6 months. And the reason why I say this is because even if you use those strategies and your credit score seems to improve in a short period of time, again, I said it does more harm than good in the short term. And you're trying to buy a home in the short term. Because when a lender pulls your credit, they're going to see that you settled all this debt for less than what is owed. And that doesn't make them feel good. I would think just like the lenders are thinking when they see someone that just went through debt consolidation or debt negotiations, because even if those strategies work and your credit score increases and becomes decent or even good, when a mortgage broker or lender looks at your credit report, do you know what they're going to see? They will see that your credit report is showing that you settled a lot of debt for less than what was owed. And lenders like to judge future behavior on past performance. So that doesn't make them feel good to lend you a lot of money knowing that you just settled a lot of your debt for less than what is owed. They're thinking they did that to that person or that company, chances are they're probably going to do that to me. Quick example, if you're dating someone and find out that they cheated on their last boyfriend or girlfriend or significant other, does that give you warm and fuzzy feelings to want to go into a relationship with that person, knowing that they were not faithful to the person right before you? Now, I'm not here to judge on why somebody cheated. I'm sure everybody has their reasons. But it still doesn't give you a good feeling going into this relationship based on their past prior behavior. As some of my boys will say, she's for the streets. And your lender will look at you and see your debt negotiations or debt settlements and be like, nah, I'm not giving them any money. That person is for the streets. Let the streets take care of them. And then you'll be homeless. So if you're thinking about doing debt negotiation or debt settlement or credit repair, do not do so. Do not go through one of those companies if you plan on buying a home in the next 2 to 6 months, because it's going to negatively impact you and how creditors or lenders look at you. Yes, your credit score may go up, but they get to see past just your credit score. They get to see your credit report, and that will tell a different story. The next thing I want to address to you all thinking about buying the next 2 to 6 months is to not open up any new lines of credit. Do not buy that car. I know it's tax season right around the corner. Do not buy a car. Wait, hold off on any big purchases or any purchases that you're going to be using a credit card for until after you buy a home. Deal? Can we make that agreement? Don't do anything until after you buy a home. Do not refinance that car, because once you refinance that car, it shows up as a new credit line. Yes, I understand it's still your same car. You may even be refinancing it for a lower interest rate and a lower monthly payment, and you may think, man, that may help my debt to income ratio. Don't do it. I am your real estate advisor. Don't do it. Now, if you want to buy a home in the next year, by all means do that. But if you want to buy a home in the next 2 to 6 months, again, we're thinking about what's going to impact you greatest within the next 2 to 6 months. And you opening up another line of credit or refinancing your car, and that's opening up another line of credit, that will negatively impact you for the next 2 to 6 months. So do not do it. Also, I know this may be hard for some people, but you have to say no. You have to say no when people reach out to you to say, hey, I know your credit is good. I know you're working on your credit. I need a favor. Say no. As soon as you hear that, say no. But their favor is going to be, can you co-sign for this or co-sign for that? And I want you to say no. And you can explain yourself on why. You can say, look, I'm trying to put myself in a position to buy a home and I can't do anything right now. And if you want to make them feel better, if this is the case, you can say, hey, I'll help you after I buy my home. But presently, you cannot help them, because once you co-sign for that car, that opens up another line of credit and puts you on the hook because it would negatively impact your debt to income ratio because you do not have that history of showing that that person has been making that payment. So if you do not have a backbone, you have to grow one and say no. Do not open any lines of credit. Do not co-sign for anyone. I don't care if it's your mother, your brother, your sister. Don't do it right now if you plan on buying a home in the next 2 to 6 months. Oh, one more thing I wasn't going to touch on, but we're on the topic, is do not max out any credit cards. I touched on this before when I talked about utilization rate. You want to be between 2 and 6%, but do not max out any credit cards and do not open up any store discount cards. You may think it's meaningless and won't harm anything, but don't do it. Do not open that Kohl's store discount card because you're going to get 35% off. Look, you have bigger things in mind. You want to buy a home. If you don't have that additional 35% to pay full price, don't buy it. Now let's talk about cash money. No, not cash money records from the 2000s. I want to talk about cash money. It's tax time, so a lot of people are going to have cash, a lot of cash. But do not make any cash deposits, large cash deposits that are unordinary to what your normal business is. You have to be able to explain all cash deposits into your bank account for the last 2 to 3 months when you go to apply for a mortgage. And if you're showing these large cash deposits, that may jeopardize you getting that home and getting approved for a loan because lenders are very cautious of money laundering. There are numerous anti-money laundering acts and rules that will cause you to get your loan denied if you have these large cash deposits. And yes, the rule is about $10,000 or more, but if you're not one to go to the bank and deposit $3,000, $4,000, $5,000 in cash on a usual basis, don't start doing so now. Now let's talk about jobs. If you're going to switch jobs, talk to your mortgage broker or mortgage lender before you do so. Now, I know some of you may be thinking, well, I'm getting more money if I take this new job. And I get it. That could potentially help your debt to income ratio because you're going to get more money at this new job. But there are rules in place, just like it is for money laundering. There are rules in place when it comes to employment. And it's always better to make sure that it's not going to impact your loan status and getting approved for that mortgage. So just make that quick phone call or write that quick email and talk to your mortgage lender or mortgage professional to make sure that it's not going to impact you. Now, just like co-signing for a loan, wait until after you close for a home. You may have to wait to take that new job until after you close on your home. And this is particularly important if you're switching what kind of employment you have. If you're going from a salary position to a W-2 position or from a self-employed position to a salary position, all of those things has an impact on whether or not you're going to be approved for your mortgage. So please reach out to a mortgage professional, your mortgage professional who you got your pre-approval through and going to get the loan through before you consider switching jobs. If I were you and getting ready to buy a home in 2023 in the next 2 to 6 months, make sure you know these 4 or 5 things that I went over in this video, because those handful of things can put you in prime position to buy a home this year. And if you're looking for either a mortgage broker or a realtor, please reach out to my team and I. We are here to help. Our contact information is in the description below. And if this video has helped you out in any way, please go ahead and like the video and hit that bell icon, and don't forget to subscribe to the page, because on this channel we talk about real estate and personal finance. I'm Sir Ashley. Talk soon.